All right, welcome back, friends. Good news. We're going to talk about something that doesn't involve debits and credits for a few minutes, so that's some good news. We're going to talk about the schedule of cost of goods manufactured. It doesn't involve debits or credits, but it does involve a big-ass formula. The good news is you already know this formula. You don't think you do, but you really do based on what we just discussed with all of the costs flowing through those journal entries and T accounts. The schedule contains three types of cost: direct materials, direct labor, and overhead, because it's our product costs. And the schedules calculate the cost of raw material, direct labor used in production, and the amount of overhead applied. And then the manufacturing costs associated with goods that were finished. Remember, that's what cost of goods manufactured is. It's the amount of cost associated with the goods that were finished and completed during the year and moved from WIP into finished goods. So we're going to start with our raw materials formula. This formula should look like something you've learned in 502 for inventory, and it's also common sense. We start with our beginning raw materials, then we add any raw materials we purchased. That gets us our raw materials available. Then we take away ending raw materials, and that tells us our raw materials used in production. The direct material cost moves into manufacturing costs, to which we add labor and overhead to get our total manufacturing costs. I prefer to skip this section and just put all of this manufacturing cost directly into the WIP formula, but it depends on what you're comfortable with. So when we're doing WIP, it's our beginning WIP plus total manufacturing costs. I would just put in direct materials, direct labor, and manufacturing overhead applied right into this formula and skip that formula altogether. But to each his own. So we'd start with our beginning work in process plus the materials, labor, and overhead that we applied during the period. And that gets us our WIP available, I like to call it. They call it total WIP in process for the period. Then we take out our ending WIP, and that tells us the cost of goods that were manufactured. Let's think logically. What I started at the beginning of the year plus the new cost that I add minus what's left over in WIP must be what's been completed. And that, my friends, is what cost of goods manufactured represents. It's the cost of completed goods. I don't know why my pen does random lines every now and then, but that's always fun when I'm doing these videos. So that, again, cost of goods manufactured is the cost of the completed goods. Then there's one more step, the work in process that gets us our cost of goods manufactured, moves on to the finished goods formula. And that formula should be extremely familiar too. It's beginning finished goods plus cost of goods manufactured equals cost of goods available for sale. If you had me, I like to call that COGS because it's fun to say. And then minus our ending finished goods inventory finally gets us to that cost of goods sold. So in algebra, basically what the schedule does, this schedule of cost of goods manufactured, is it does in algebra what we did in journal entries and T accounts before. So again, let me show you the raw materials used in production from our raw materials formula goes up into calculating manufacturing costs. That total manufacturing cost is part of our WIP formula. And then those cost of goods manufactured goes from WIP into our finished goods. So all of the columns are related to the previous one. You can't solve one column without solving for the other. So we're going to have problems on this where we give you some of the variables and you have to solve for the missing links. And the goal of that is to test your understanding of how the formulas work and how they connect together. Here's some simple problems to get you started on your practice. Again, there's a lot of practice that's available on Canvas. There's a lot of practice that's also available on Connect, which is the McGraw-Hill software that we use for homework, quizzes, and exams. So please utilize all of those resources. Here, again, I recommend you pause the video so you can give it a go on your own, and then we'll do it together. Welcome back. For those of you that actually paused the video, the beginning raw materials inventory was 32. During the month, 276 of raw material was purchased, And at the end of the month, we had 28,000 left, and it wants to know what the direct materials used were. Well, we're going to use our raw materials formula, which is beginning raw materials plus purchases equals raw materials available minus ending raw materials equals raw materials used. And we're assuming that all these raw materials are direct materials unless we're told otherwise. Because remember, they could be indirect, which means they go into overhead, not WIP. So the beginning raw materials was 32. Then we purchased 276. So using my calculator, because my brain doesn't work, 32 plus 276 is 308 for our raw materials available. Then if 28 were left, we must have used the difference, which is 280,000. So let's see if we're right. Boom, I did it. 280,000 is correct. So here it is all typed in pretty. If you didn't like my writing, it's done the same exact way. Now, this is really baby steps. We're going through the formula from start to finish, top to bottom. Again, on practice problems, you may be given everything except for beginning raw materials, and you may have to solve backwards to get there. Again, it's a puzzle. You put in the numbers you know, and you solve for what you don't know. It shouldn't really matter which variable is unknown. You should be able to solve for any of them. Let's do another quick check. So take a minute, give it a pause. And now welcome back. Direct materials used in production totaled 280. Direct labor was 375 and 180 was overhead, and it wants to know the manufacturing costs. Well, manufacturing costs are direct materials, direct labor, and manufacturing overhead. If you have a poor memory like me, remember that 280 in raw materials used. That's where they got the direct materials used in production. Again, the raw materials used are assumed to be direct unless you're told otherwise. So we take the direct materials, the direct labor, which is given, and the overhead applied, which is given. Add that together, and that's going to get us our manufacturing cost for the period. 280 plus 375 plus 180 gives me 835,000. Boom, B it is. Cannot be determined, just an FYI for you. That's the crappiest answer ever. Don't pick it. You may not be able to determine it, but it surely isn't the answer because I know how to get to the right answer. We're not going to give you a problem where you can't figure it out. That's an awful thing to do to somebody. That doesn't mean your other professors won't, but we don't. So 835 is the answer. Let's see if we're right. Oh, I'm so good. 835 is correct. Moving on to quick check 3, give it a little pause. And welcome back, friends. It tells us beginning WIP is 125. Those manufacturing costs are 835. That's what we've previously figured out on this last one. And it says that 200,000 of partially finished goods remain in WIP at the end. What's cost of goods manufactured? So we use our beginning WIP formula plus our manufacturing. Cost equals WIP available. That's what I like to call it, minus ending WIP equals cost of goods manufactured. So our beginning WIP is 125,000. Our manufacturing cost is 835. Do a little math action. You get yourself some WIP available. 125 plus 835 is 960. Ending WIP is 200. So our cost of goods manufactured is the difference, which is 760,000. So the answer should be C. Is that right? C. It is. Yes, it is. And you can see the answer typed out and all pretty for you, but it's done in the exact same way we did it together. Quick check 4. Give it a pause. And welcome back. I hope you had fun trying this one out on your own. We're looking at the finished goods formula. So beginning finished goods is 130. To that, we're going to add our cost of goods manufactured, which is 760. That we calculated back here in the previous problem. That's going to give us my favorite, a little COGAS. So 130 plus 760, I'm going to go out on a limb and try to do this without a calculator. I believe that's 890,000. And then we're going to take out our ending finished goods, which it said was 150, and that's going to get us our cost of goods sold for the period. So 890 minus 150 gives us 740. So B should be the answer for this one. And it is. Look at us go. So I think you need to remember that though this is a big-ass formula, I think it's a little easier than dealing with debits and credits and journal entries. So really what I would recommend in any problem you have involving the schedule of cost of goods manufactured is you write out the formula, you plug in the numbers that are given, and then you just start solving for the missing piece. That's really the key. Here in our example, we went from top to bottom, so it was quite easy. It's not really any harder to go backwards as long as you lay it out correctly and you put the variables where they belong.